Welcome back to a new monthly update of our investment portfolio where we show you everything. Current positions, recent buys and sells, everything about the investment portfolio. As an example and for inspiration, maybe for further research on the stocks we have, which you might also find interesting. Earlier, we shared our DeGiro investment portfolio with you, and now we're talking about our Interactive Brokers account. Why Interactive Brokers? This is our business investment account, so that is linked to the business venture. And we have a slightly different strategy because we have this portfolio actually just getting started, specifically the end of 2024, beginning of 2025. This isn't really the best stock market year to take on large positions. So we have relatively high cash levels and we have relatively more positions with smaller amounts in stocks that you probably have never heard of. I wouldn't recommend this. These are again cyclical / value stocks that we think can definitely generate returns, but also high dividends alone. You need to have a really strong stomach. An example that I will show. In this portfolio update, there are shipping stocks. The shipping industry naturally goes through ups and downs because it's commodity cycles and that sector is moving, especially in the short term, but for the long term, it's an interesting investment thesis. At least that's our belief. So let's take a look at our Intrafact Brokers account. Do you have any questions? Let us know, then we can brainstorm about it. And finally, I would appreciate it if you could give a like and subscribe to our channel so that we can grow. And as we grow, we can invest more in better quality videos that will, of course, help you towards financial freedom. For what then? Let's take a look at the portfolio overview for this month. But first, a little bit about the account with Giro. ACM Research with the ticker ACMR is quite a volatile stock in the semiconductor sector. They make a kind of cleaning products for supplies in the semiconductor industry. Did I recently buy some more? At least about a month ago. And it's not performing very well. But today, apparently, they are having a good day. So it's interesting to investigate what's going on here. Have you done any other transactions? Part of it is also shortened to build up some more cash. The same goes for Intrap Brokers, where I'm not in a hurry to invest a lot of money. Here you see an overview of the holdings. This is, by the way, on a monthly level because our start hasn't been very good. Since inception, the stock return is even minus 17%. So our value position hasn't started off well. But that will come, and I'll show you soon why I'm not worried at all. The current cash position is still half, so 50%. You see an increase in money here. That's just a deposit and an additional contribution. And we're just taking it easy. We're gradually building up with quite a significant percentage that we can use invested in real estate funds. They have also dropped a bit recently, but I think that's actually a really nice entry point. And equity has also made a good comeback this month. And I think that's going to work out too. So we see the portfolio movers. Those are 3 shipping stocks online. And DHT, for example. Both oil shipping tankers. Which ones are doing less well? Clive Brand's a small stock, where I also have a small position. And Stoneco, for example. Stoneco and Parseguro remain in the portfolio, but they are really performing very poorly. And that really weighs down the result of that minus 17%. So that also explains part of why they're doing so well. I'll just switch to Inception, or year to date, and we see a number of developments. The stocks year to date are indeed positive, and that's due to a significant increase in shipping stocks. So I have relatively some shipping stocks, and I recently bought more. So a recent transaction is, for example, from Frontline, and I've also bought a little more of other shipping stocks. And because of that, since they are rising sharply again, I benefit greatly from that. The latest purchase in this portfolio is Carnival with the ticker CCL. A smaller position, as you can see, of 3,000. So it's the other way around, 2.5%. And actually, my largest position is Kelly Partners Group, KPG. This is a very interesting stock. I also did an individual analysis of that on our channel. So definitely check that out. You definitely want to see that. And also, Serial Acquirer with the ticker TVK, still performing quite well, though some are in the plus only. Other stocks are significantly in the red, and those are Stoneco, Paseguro. So they really weigh down the total. What has happened? Well, interesting to share, I think. For this month, it's shipping stocks. Frontline. Average purchase price is 19.2. However, I bought Frontline for the first time. Let's take a look at the transaction history. In June 2024. So when we look at the chart, we see June 2024, that's actually here. After quite a drop. That was already a drop of about minus 17%, but you see it has dropped much further. Namely from that big peak. Here. It has dropped by about 54%. So that's a significant drop. You need to have a strong stomach for that. What have I done? I bought just a tiny bit more after a drop on September 13th. And you can also see the quantities. So the first small position of 50, then another time of 50 on September 13th. That's roughly somewhere here. So this is yet another further drop. Because we first had a drop of minus 17%, then a drop of minus 24%, and the last purchase was actually a doubling of the position, namely another 100 shares, but then at a price of 13.7 and 13.7. That's actually almost at the bottom here. From this chart, how did I come up with that? Well, that's just luck because market timing doesn't really work out well. But because I have a cyclical stock, I used a little bit of technical analysis, and I'm definitely a beginner in that, because I look at fundamental analysis. But yeah, it's not that shocking either. It's not that difficult either. And then there was a support level around this price level. And yes, price started to rise again. So it could just as well rise for a bit and then drop significantly again. But you see a huge increase from the result because since the drop, it has actually risen about 40% now in a very short time. And I've actually done the same little trick for the other shipping stocks as well. For example, ASC and that. And yes, because of that, the positions are starting to rise significantly again. The total returns are still at minus 6%, as you can see. And yes, that's an unrealized loss, but that only gets realized if you sell it. I'm not planning to sell Frontline in the short term, because this is actually a long-term industry. That might surprise you. Shipping stocks, commodities, cyclical industry as well. Only Frontline is very interesting because we have a very aggressive acquisition strategy. It's like this, the investment advice for Frontline and other shipping stocks. That's it. In recent years, hardly any ships have been built. And the public investments from the year 2007, 2008, when everything was going really well, all those new ships are now actually almost at the end of their lifespan. So there's a very large assortment of old ships that need to be replaced or scrapped. And shipbuilders need to start building new ships. Building new ships takes several months to years, even more years actually. So there can be a huge sold come into the supply chain, squeeze of demand and supply. And the management of Frontline provides, I think, interesting updates about that. And for that, you should actually visit their investor relations page and check the quarterly reports. Then you'll find all sorts of justifications for the investment thesis. I'm not going to explain that to you here. You'll have to do your own research to understand what you're investing in, but I wouldn't recommend it to everyone. And what's striking about Frontline and all those other shipping stocks is that valuation is still quite cheap. On the other hand, relatively high debts, as we can see here. So, especially Frontline is more extreme. Erin, they have a lot of debt at the moment due to acquisitions and just reinvesting. And that's quite a serious risk. So, that's why the price can drop so quickly. As you can see, a 50% drop in a year or even half a year is actually nothing for this stock. But other factors are still quite cheap in terms of price to cash flow. And what might be surprising is that they have a very high dividend yield. And it's also expected that the dividend will still be high for next year, in any case, above 8%. So they pay out a relatively high dividend. And I have Frontline, and I also have it in the Giro portfolios. And I can also show, for example, here, that's such a point. It was up 40% for a while, but now it's only up 2% after that recent drop. And what we see here is the unrealized profit of 450 euros in this case. So that's 400 euros in dividends received in the past period. You see a position of 3,000 shares. I didn't bypass DHT here, so that's already a return or a dividend of more than 10%. And Frontline is also going to pay out a bit more in dividends. But Frontline hasn't paid out a lot of dividends yet. Last year, so I also have Frontline in my position. It also happens to be down 6%. Well, I also bought a little more at Giro. And you see that the total profit and loss is +8. So the loss of 250 in share price has been offset by the dividend. But I'm waiting to see when new dividends come in, and of course, how high that is. Cheers! The high dividend, and if you also reinvest that dividend, it can actually lead to unexpected returns. Listen, returns. But it's really difficult to value Frontline because the price to earnings ratio doesn't really say much, to be honest. The downside risk is very dead. You see the revenue, yes. That can easily happen. It's currently on the rise, and they have an aggressive acquisition strategy. So it should be that the revenue starts to rise again, but it can just as easily go the other way. And that profit is, of course, very dependent on macroeconomic developments in the shipping industry. You see that interest costs, interest costs are starting to weigh heavily. But nonetheless, they are still just making positive cash flow. And of course, we need to study the balance sheet much better for this. But for example, just the cash flow. They are, of course, also just making use of write-ups. So we can already see here 300 write-offs. These are, of course, somewhat adjusted figures. So we actually see a more positive cash flow than you might expect. But the free cash flow is very negative because the significant investments that Frontline is making are... We also see that although Frontline already had significant assets, is it taking on more debt? But they also paying off a lot of debt. So this is really a very interesting way of financing, I must say. That's why I would encourage you to take some time to delve into Frontline as an example of the potential opportunities in the shipping industry. But anyway, I take relatively smaller positions because the downside potential is very large. It could very well be that they go bankrupt, and of course you have no control over that. Now, forecasting based on the EPS growth, so we see that below. That was put in place by 9 analysts and then by 1 analyst, so that's not very reliable. Some profit growth is expected for the coming years. Just for fun, let's say that's true. The current price to earnings ratio at the moment is 8. That had actually dropped to 6, is now 8. And this earnings growth per share for the EPS is correct. With the same price to earnings ratio, the average return could be 20%, including dividends. And without dividends, that's 8.6%. It's a bit of a guessing game, viewers, when we mention it. It's not certain if all of this will be realized. I just think it could be much more this profit due to shortage of supply and demand. And that's why Frontline is definitely interesting to take a closer look at. As I already mentioned, I have diversification across several shipping stocks. So just to quickly recap, and that's the last for this update. Of course, there will be a new update from Interactive Brokers next month. So if you want to keep following that, subscribing would be greatly appreciated. And also a like on the video if you find this enjoyable or interesting, because that helps our algorithm grow. So that's only a good thing. We see ASC, we see BAT, Frontline, Starbuck Carrier. And now let's take a look at Starbuck Carrier. Is it actually one of the few shipping stocks that has dropped a lot? But it hasn't risen yet. So also Starbuck Carrier, just from the last peak for convenience. It has dropped by almost 50%, but there hasn't been an increase yet. If you look at, for example, the dividend from Starbuck Carrier, then that's actually surprisingly high. So this valuation is already a lot more pleasant or cheaper than Frontline. And the dividend has just increased to 16%. They also pay out almost all the dividend. Starbuck Carrier also has relatively high debt. But if you look at the cash ratio, in the short term, there seems to be enough liquidity. For some reason, Starbuck Carrier has lagged behind in a recent increase, while, for example, ASC or DHT have all increased relatively a lot. AAC has also increased by about 22%. A small shipping company might benefit, but of course AAC and Starbuck Carrier are different types of shipping companies. than Frontline and DHT. I actually find Frontline, E and DHT even more interesting, also because they are in the oil industry. They have oil tankers, which is already a good market to be in. But I think oil will still be needed a lot. And all those developments in sustainability, that's just lagging behind. It's not happening fast enough. So it could be that there is again extra demand for oil, then more tankers are needed for the report, of course. And what if there's also a supply chain crease is coming with too few ships, and the demand is increasing even more? Then it could really explode. That's why it's still interesting, but be careful with your money. Take smaller positions, because it can also turn out to be a big disappointment. There are a few other, I would say, more speculative positions like Canadian solar industry, which I find quite interesting. But yeah, that's actually a different ball game, and there isn't much to report on that at the moment. Finally, just a quick word about real estate. Real estate funds. Positions taken in MAA, NNN, Realty Income with the ticker O, and Visi Properties. Visi Properties. Actually, at this moment, most of it dropped a bit. Lately, Visi Properties seems really interesting to me to invest in if you're a dividend investor. And I'm not a dividend investor, but I did it for the potential growth and a bit for the dividend. Because for this portfolio, I want to have a bit lower risk, so a bit more dividend. And in that regard, Visi Properties actually fits quite well. The current price drop has now fallen to 12, and potential return is actually the norm. Multiple, I think it's around 16. Yeah, around 16. Look, a small drop is needed in the price, and then an average return of 70% could be achieved. And of course, including the dividend. The dividend was about 6%, and Visi Properties looks good. Here, the valuation is low. There's just some good potential. As you can see, it scores a strong buy on the factor analysis. But also, the profitability is just quite good. With a return on total assets, for example, at 6%, return on common equity is 11%. So actually one of the best performing real estate funds at the moment. When you talk about profitability, that's about VC Properties and about REITs. Keep following us. Subscribe. Then you'll also get the new updates about our DeGiro portfolio and new transactions, of course, within both portfolios. Thank you, and see you next time.